Welcome to this webinar hosted by Wilkin Chapman and Sowerby Chartered Accountants. For those of you that don't know me, I'm Teresa Thomas, Head of Employment at Wilkin Chapman. I'm going to start by introducing our panel of speakers today. So with me talking about the off-payroll working arrangements, IR35, we've got Tom Martin from Wilkin Chapman. Afternoon, Tom. And then joining us from Sowerby, we've got Billy McLaughlin.
Hi there.
And Richard Skewis.
Good afternoon.
Hi, Richard. And they're going to be talking about the VAT domestic reverse charge. So Tom and I are going to start off this afternoon. What we're going to cover is who is affected by the new rules, how to apply those rules, steps you need to be taking to ensure you're compliant, and what you actually need to be doing now. So a bit of a brief background to IR35. It's not new, as I'm sure you're all aware. It's been around now for just over 17 years. And it's all to do with people that work as contractors or consultants with that sort of worker label on them, and whether they're deemed to be an employee for tax purposes of an end user client, stroke business. So what happened when it was brought into being is that the intermediary themselves were supposed to decide whether they should be paying tax or national insurance. But the estimate was that 90% of intermediaries were not actually compliant. In other words, they were paying themselves by dividends to save tax and national insurance, when in fact they should have been paying tax and national insurance. So the focus for today is what is called the off-payroll working rules. And Tom and I are bound to trip over that quite a few times this afternoon, because it's not the easiest thing to say, but they previously applied in the public sector from 2017. They were due to come into the private sector in April 2020, but because of coronavirus, I didn't think I'd be mentioning that C word today, but sorry, because of coronavirus, they were delayed, and so they're coming into effect this April 2021. So Tom, can you help us with, first of all, who are the new rules going to affect?
Absolutely, thanks Teresa, and afternoon everyone. So as Teresa said, what we're looking at here are situations where we have a supply chain that involves an individual who is providing services to an end user client, but they are providing those services through an intermediary, most commonly their own personal service company. So you might have Joe Blogs providing services through Joe Blogs Limited. Now, those supply chains can vary in scope. There may be a number of other entities within those supply chains. You might have agencies or umbrella companies involved. But the key things as to whether or not these off-payroll working rules apply are those three things: the individual, the personal service company, and the end user. And the individual is providing services to that end user. So the general position where you have a supply chain that looks like that is that these off-payroll working rules will apply. Now, there are two major exceptions to that general principle. The first is the small company exemption. So if the end user client in that supply chain is a small company, then those rules will not apply to that supply chain. So what do we mean by a small company? Well, we're looking at the Companies Act definition of small. So the company needs to satisfy two of the following three criteria. That company needs to have less than 50 employees, less than £10.2 million of turnover, or less than £5.1 million on the balance sheet. Two of those three criteria are met by the end user client. They are small, and therefore the rules will not apply to any individual providing services to that company. Now, where the end user is part of a group of companies, what you look at is the parent company. So is the parent company a small company or not? And that will then determine whether or not this small company exemption applies. The other major exemption, which is a new one that's been added in since these rules were supposed to come into effect last year, and that is whether or not the end user has a UK connection. So where the end user does not have a UK connection, as before, the rules will not apply to that supply chain. So what do we mean by a UK connection? Well, there are two things that can lead to a UK connection. One is if the end user client is what we call a resident of the UK. So they are either incorporated in the UK or they are managed or primarily controlled within the UK. So if they are a UK resident, they have a UK connection, and these rules will apply to any relevant supply chains. It can also apply, so there can also be a UK connection where the end user company has a permanent base of residence. So any permanent business location within the UK where they trade or carry on business. So if any of those two things apply, there is a UK connection, and these rules will apply to that relevant supply chain. So Teresa, if I hand over to you now to discuss what impact whether these rules applies or not will have on these relevant supply chains.
Thanks, Tom. So basically, there are two key responsibilities. If the off-payroll working rules apply to your situation, then there are two things. One is the status determination, and the second thing is the fee payer, who's going to be paying the tax and the national insurance. So you'll see, hopefully, up on your screens, then some diagrams that we put up there, and we will email these to you afterwards. So if you look at the left-hand diagram, where the end user client is small, that is where Tom was just talking about. So they don't either small or don't have a UK connection, then both responsibilities for determining their status and who should pay the fees lie with the personal service company. So in Tom's example, Joe Blogs Limited, and that is in accordance with the original IR35 rules. So the right-hand side of the screen in front of you, you see two other diagrams, and that is where the rules do apply. So in that respect, you can see that the person or the organisation that is doing the status determination is always the end user client. So it doesn't matter how many people are in the particular chain, the status determination is done by the end user client. Tom's going to go into more detail about what status determination means. But the fee payer responsibility, the person that's putting, or the organisation putting their money in their pocket to pay the tax and national insurance, is always the organisation, the entity who is directly above the personal service company, Joe Blogs Limited, the one that's above those in the chain. So what you see here on the far right is we've got an agency between the end user client and the personal service company. So they would be the fee payer. Whereas the one in the more middle of the screen, we've only got the end user client, no agency in between. So they're actually having to do both of those things, determine the status and pick up the tab for the tax and national insurance. Hopefully we've got that will come down that slide, and we've got another slide coming up, because what we've got is, you can see there's a situation where the difficulty becomes, if you're an end user client and you've got lots of different entities and organisations between you and the personal service company, if the actual original fee payer hasn't got the money to pay HMRC, then they will go back up the chain to recover it. So ultimately, the end user client could end up picking up the tab for this. So as an end user client of somebody who's a contractor, a consultant, undertaking those, you need to make sure that those organisations in the supply chain that you might be contracting with are good, solid companies, and make sure that you do some due diligence on those organisations. So over to you, Tom, to cover what is involved in the actual status determination, and this is the key, really, to these new rules.
Yeah, of course. Thanks, Teresa. So what are we actually trying to determine as an end user client when we do a status determination? Well, what we're looking at is whether or not there is what is called deemed employment between the individual providing the services and the end user client. So if it wasn't for the personal service company standing in the way, would this individual ordinarily look like an employee of that end user client? Now, I think it's important to state at this point that this is a tax test only. What we're about to go through, the IR35 rules, only apply for the purposes of determining someone's employment status for tax purposes. What it doesn't do is determine any employment rights that the individual might or might not have in any given situation. So it's not dealing with holiday pay, sick pay, unfair dismissal, anything like that. Now, what you might come to realise as I continue talking about this is that they are extremely similar tests to determine someone's employment rights and their employment status for tax. But as I've said, I just wanted to make it clear that what we are doing today, the focus of this webinar is the tax test, so to determine who pays the relevant tax and national insurance. So there are three main components to the status determination, three main things that you need to look at to determine whether or not there is deemed employment. Now, they are personal service, mutuality of obligation, and supervision, direction and control. And I'll deal with each of those in turn. So personal service, first of all, what that is trying to establish is whether or not there is a requirement by the end user client that the specific individual who we are looking at has to carry out or perform the services themselves, and they won't accept anyone else to come in and perform those services. If that is the case and there is personal service, then that is going to swing your determination towards deemed employment. So what's the counter position? Well, that is where there is a right of substitution involved. So the individual can say, I'm not coming in today, I'm ill, or I can't make it, or whatever the case may be. And they can then say, do you know what, Dave's going to come in and do the work instead. Now, it's not quite as simple as just having a right of substitution involved. It has to be an unqualified right. So if there are caveats that the end user client places on any substitute who they may allow to come in and perform those services, then that isn't a true right of substitution in reality. So if you as the end user say that they could only provide a substitute on the second Tuesday of every month and they have to be called Philip, then you're really narrowing down the scope of that, and it's not going to wash basically, and you're still probably looking at deemed employment. But if as the end user you have quite little say in who comes in as the substitute, then you have an unqualified right of substitution, and that will then swing your determination away from deemed employment and towards it being outside the scope of the rules. Now, one thing predominantly to note here is that you can't just expect any Tom, Dick and Harry to turn up to your site and perform services. So I think it is more than fair and reasonable to include a caveat that the substitute has to be suitably qualified to perform the services. And also, I think it really helps your cause if that right is actually exercised. If a tribunal or court examines it and they've performed services for you for an extensive period of time, and no substitute has actually ever been provided, and there have been circumstances where it may have been possible, then again, that's not going to go in your favour, and the tribunal may decide that that's not actually a true right of substitution. So that's personal service. Mutuality of obligation then is the second part of this test. Now, in its simplest terms, that involves looking at two separate questions. The first is whether or not the end user client is obliged to provide work to the individual. And if that is the case, then you ask whether or not the individual is obliged to perform those services that are provided. If the answer to both questions is yes, then you have a mutuality of obligations between the parties. And again, that is going to swing your determination more towards deemed employment. If the answer to both of those questions is no, then there is no obligation on either side, and that is more likely to swing you back towards it being outside the scope of the rules. It's not quite as straightforward as I've just made out. It is a notoriously grey area of employment law, as many of you may know, and it is often difficult to determine. It won't be straightforward to establish. HMRC have muddied the water even further, and I know Teresa's going to touch upon that a bit later on, so I won't tread on her toes here. But really what you're looking at is whether or not someone can say, you have to do this work, and if they do that, then the person has to say, okay, well, I've got no choice in the matter, really. So that's mutuality of obligation. The final thing then is supervision, direction and control. So you're looking at the nature of the relationship between the end user client and the individual, and where responsibility lies for what work is done, when the work is done, how it is done, and what sort of work is involved. So if the end user client has the right to tell the individual that you have to do this work at a certain point in time, it has to be done a certain way, then that again is probably leaning more towards deemed employment. That's more of a boss relationship. Whereas if the individual contractor can say, well, I'm going to do this work at my own pace at this time in this way, and the end user client can't really have a say in that matter, then that again is more likely to take the relationship outside of these off payroll working rules. But the key here is the right to exercise supervision, direction or control. It is not the actual exercise of it. So if the end user client declines to exercise their right of supervision, direction, control, then that's not really relevant. It's whether or not they actually have the right to say, I think you need to do the work this way, or you should be doing it at this point in time. That is what a court or tribunal will look at. They will look beyond just the exercise of the right and who actually has determined these various things. So it's something to be wary of, particularly when you're dealing with experts where the end user might not have the required sort of level of knowledge to really determine whether or not or when the work should be done, for example. So those are the three main pillars really that you're looking at. And I think the general school of thought on this is that you need all three of those to be yes, in order for there to be deemed employment. But as with most things, it's unlikely to be that straightforward for you. And so there are a number of other factors that probably should also be taken into consideration when you're looking at this. And I'll touch upon a few of the key ones now. So the first is the business on own account test. So is the individual contractor in business on their own account? Do they market their services to the world? Do they provide other entities with services whilst they are providing services to you? If they do, then that looks a lot more like a genuine self-employed arrangement than one of deemed employment, whereby maybe the contractor has provided services solely to one end user client over a sustained period of time. Similarly, how integrated that contractor is into the business is also going to be relevant. So do they get invited to the Christmas parties? Do they have a company email address, a company badge? Are they required to wear a uniform? The more they look and act and seem like an employee of the end user, the more likely there is to be deemed employment in place, and the more likely therefore these rules are to apply. Same sort of consideration applies as to whose equipment is used. So if the contractor uses their own equipment, it's more likely to fall outside of the scope of the rules. So those other factors are all going to have a bearing on whether or not there is deemed employment. So if you have a bit of a grey area with one of those three main tests, then if you look at those other factors, they may well be determinative one way or the other. But generally, you just need to produce a balanced view in the round, looking at everything that's involved, and you need to analyse the position on the ground as well. It's not just the contractual terms that matter, it's what's actually happening on the ground day to day that you need to look at. And you need to provide a sort of honest assessment. There is a requirement in the legislation that you take reasonable care when making these status determinations. So you can't just throw everyone, make a blanket determination, say you're all either in the rules or you're all out of the rules. That's not going to wash, that's not compliant. And there is a theme that will start to develop now that if you fail to comply with your obligations under the regulations, then you get the same punishment, which is that you get handed the dreaded fee payer liability. So if you're found not to have taken reasonable care, when you're making your status determination, then that's what could ultimately happen to you, get landed with that liability. So you need to make sure you take care and look at each case on its own facts. Now, once that status determination has been made, so once you've decided whether it's inside or outside the rules, then you need to pass that determination down the supply chain. So we've got another helpful diagram for you up on the screen now. So as the end user client, your responsibility is to provide the status determination directly to the worker, but also to the next entity down in the chain. So you can see that that is an agency in the example there on the left. Each party then has its own obligation to continue to pass that determination down the line until it reaches the PSC and the worker. If there is a failure on any party within that chain to comply with the obligation to pass the status determination down, then as I've said, they will have failed to comply with their obligations and they will be slapped with that fee payer liability, which everyone is no doubt trying to avoid. So be careful that once you've made that determination, you need to put it in writing, you need to be able to articulate why you've made that determination, and then you need to send it out to the relevant parties in the supply chain. One thing then to mention about status determination, a final point, is that once you've sent it out to the worker, that worker has a right to challenge that determination. So they can respond to you and say, I don't agree with what you've said for XYZ reason. If they do that, and they should send that directly to the end user, then the end user has 45 days to consider that and respond directly to the worker in writing. And that decision then, whatever it may be, whether they've changed their determination or kept it the same, is then final. So 45 days is a very extensive period of time. So please comply with your obligations. You're given plenty of time to do so. And again, you'll be slapped with a fee pay liability if you don't. But also, I think it's worth noting that that's probably going to have very limited effect in practice because it's a very short, very contained means of challenge by the worker. So whether it's taken up or not, I'm a bit dubious as to how many people are actually going to bother doing that. But there you go, you need to know that it is in place. Now, you'll be pleased to know that there are things out there that can help you make these determinations. You're not all on your own. Obviously, you can take advice, but also the government has set up their CEST tool. So Teresa, can you just talk us through how that can help businesses out when they're making determinations?
Absolutely. So CEST stands for Check Employment Status for Tax. It's a government tool that's on their website, completely voluntary, whether you decide as a business that you want to use it. I say a business, the contractor, the consultant can have a go at using it as well. You've got no obligation, but it does give you a view on deemed employment based on a series of questions and answers that the answers that you put into the questions. The only thing is, well, more than one thing, there's a downside to it. It's been widely criticised because there aren't actually any questions in there that cover one of those main three pillars that Tom was talking about a short while ago. So the second one of those was mutuality of obligation, or MU as we call it. And the questions around that are not clear at all on the CEST tool. It's almost like HMRC think, well, if there is a relationship between these two parties, then there must be mutuality of obligation. And we know as lawyers that that definitely is not the case. But I would advise people to go on there and use it. It's not tracked, so HMRC can't see that you went in on this day and did this determination and this was the result. But they have said that they will stand by the results. So it's worth going and going on the CEST tool. You get the answer that's come through, and if it's a good answer, that's great. You can always use that as part of the supporting evidence for the status determination statement that Tom's talked about, that you will be then sending through to the next person in the chain. But there is this vague disclaimer that's come up on the screen, which could in theory be used by HMRC as an escape route. They always like their escape routes, don't they? From being bound by the answers. So if you'll see at the top there is they'll stand by the result unless the information you provided was found to be inaccurate when they've gone through it. So, you know, don't go through it also, the bit next to the exclamation mark, and contrive your arrangements, because what I've known some end user clients do is go through, put in what the truth of the situation is, they get a status determination answer that they don't want. Oh, this is deemed employment. Oh, they don't really want that. So then they go back through changing the answers to some of the questions to see how they can then try and avoid having deemed employment. So that isn't going to work. You've got to be truthful. You've got to put what's actually happening on the ground, not might just be in your documentation. So always, as Tom has said, get advice when you're unsure. This is a complex area. There are lots of grey areas. So the CESS tool is a helpful tool to use, but it's not certainly the be all and end all. You might want to get advice from us or from Sowerby, other accountants, you know, to make sure that you are confident that your status determination statement is accurate and that you're correct in whether there's deemed employment or not. Because obviously many contractors are not going to want to be in deemed employment. They want to be able to be outside of the rules, and therefore that's what they're going to be pushing for. You might equally want that to be the case, but ultimately nobody wants to end up paying a big bill for tax and national insurance with a load of penalties as well because they've gone the wrong side around the rules. So finally, Tom, we said we would cover what should businesses be doing now to prepare for April.
Yeah, absolutely. And I think now is a very good time to start preparing for it. As you've no doubt gathered, there is a lot involved here. We've just given you an extensive amount of information to take on board. And so I think it's crucial that businesses get prepared for this. And as Teresa said, there can be potentially quite serious consequences for failing to comply with these obligations. So you've done the best first step, which is joining this webinar and listening to us all talk to you today. So that's great. But I think the next thing really from your point of view is to go away and review any working arrangements that you have and see whether there are any in place that might get caught by these new rules. If there are, then it's probably worth doing an initial assessment as to whether or not you think that the off-payroll working rules, there you go Teresa, I've tripped up now as well, do actually apply to that arrangement. So go on the CESS tool, have a look around, do your own status determination and see whether or not you think that the rules will apply to that arrangement. If they don't, then you may be perfectly content to carry on, but there may be other things that you want to do as well. We would always advocate having a solid and robust contract in place with any of these contractors that you engage in these types of arrangements. Now, I've said already that a court tribunal would look beyond those to what's actually happening on the ground when you're looking at a status determination. But I think it is still good to have those in place. It can be good evidence of the intentions of the parties as to what they thought the arrangement was supposed to be. And putting in things like a fairly strong substitution clause, etc., they may well get you some way when you're looking at status determination. So that's one thing. You might want to have a look at your contracts and see if they are up to scratch and up to date in terms of the relevant position. You may want to even go further in that and actually look at the working practices that you've got, and you may want to change that, do something different. So do you want to bring people onto the books? You know, if you've got a lot of people that may well be in deemed employment, then you might want to bring them on. It reduces the risks of potential employment rights claims down the line, tax risk as well moving forwards. It cuts off your tax liability at a certain point. You do have the upfront costs and ongoing costs of things like holiday pay, sick pay, but you get a sort of guaranteed position when you do that. So it's always worth considering. There's also the option of going through agencies on a more regular basis. As we've seen, putting someone between you and the PSC in the supply chain creates a buffer, particularly with the fee payer liability that no one wants to get landed with. And so it might be more prudent to go via agencies rather than taking on people directly. Equally, that's another entity in the supply chain that you've potentially got to manage. They may also want to hike up their rates prior to the new rules coming in. And so there's a negotiation potentially to be had with those sorts of entities moving forward. Or do you just want to scrap taking on contractors altogether? Obviously, they have their benefits, but there is a lot of work involved. So there's a lot really to consider moving forward about how you want to go. And it's about balancing the various risks. And so understanding potential liabilities in any given scenario, really understanding these new rules are key here, and taking a proper good hard look at what's involved and what these arrangements look like is going to be crucial. I think now is the time to do that. And as Teresa has said, I'll shamelessly plug our services as well. Get advice if you're unsure. These are complex areas, so whether you go to accountants, whether you go to lawyers, it is worth getting advice, because these aren't easy rules to understand all the time, and there are quite complex arrangements out there, so always get advice moving forward. So that's it from us on our bit. As Teresa said at the outset, we'll do questions and answers at the end, so we'll look at that later on. But first, I'm going to hand you over to Richard and Billy.
Thank you, Tom. Just to start things off, obviously, it's difficult for us to get everything across today. Today is really just an overview. If you do need any more detail, there is significantly more detail on our website, or you can speak to your existing professional advisor. We're just going to run this on a straight question and answer sort of session with Billy and I, just to give you an understanding of what the VAT reverse charge is and how it might affect your business. So I'll hand you over to Billy to start with, as she's going to answer all the questions. Ask all the questions, I'm answering them.
I guess the best place to start really is just the first question is, Richard, if you could explain what VAT reverse charge actually is, that would be great.
The clue really is in the question, reverse charge. The revenue are effectively reversing who accounts for the VAT on any sale in specific circumstances. As it stands at the moment, a supplier raises an invoice, includes it VAT. He hands that to his customer. Customer pays that, including the VAT, to the supplier. The supplier then records the VAT on his VAT return and then pays the VAT over to the VAT office. Under the new rules, if you are caught by the reverse charge, what will happen is the supplier raises an invoice. VAT is still chargeable on there, but is not accounted for by the supplier. The VAT that is due on the sale is accounted for by both. Sorry, the VAT on the sale is accounted for by the customer, both for the sales output VAT and the purchase input VAT. Now, it all sounds rather complicated, but hopefully as we run through some of the further questions, you will see how it works and how it impacts you.
That's great, thank you. And could you explain why this new scheme is being introduced, please?
Okay, the revenue states because of missing trader fraud. I don't like the word fraud. I think what they actually mean is a tax loss. There are scenarios whereby a supplier will raise an invoice and pass it to the customer. Customer recovers the input VAT, but the supplier declares bankruptcy before he pays the VAT over. On that basis, there is a loss of VAT to the revenue. So it centres really around that. There are what they classify as some frauds as well, but I think pure and simply it's tax loss. Okay, great. So when do the new rules become effective? A little bit like the CIS off payroll rules that Tom and Teresa were talking about. They were supposed to be introduced last year. They were deferred and become effective from the 1st of March this year.
Brilliant. So if I'm in the construction industry, how do I know that I'm affected?
Okay, so I suppose the two key areas are if you are in the construction sector or registered under CIS, and if you're VAT registered. So if you're not VAT registered or you don't work or not registered to CIS, then these rules will not apply. You don't need to worry. The revenue, however, have been reasonably helpful and giving us 5 questions, or giving you 5 questions. If you answer no to questions 1 to 4, then these rules don't apply to you. So nice and straightforward as you run through. As soon as you get a no answer, you don't have to apply these rules. So the 5 questions. Question 1. Do the supplies fall within the scope of CIS, i.e., are you a registered CIS supplier? If you are, that's a yes. You move on to the next question. If you are not, then the normal rules of VAT apply. Question 2. Is the supply standard or reduced rated? So again, if the supply that you are making is 0 rated, the reverse rules do not apply. So you apply the normal VAT rules. A little bit of I say an ambiguous question. The reason the rules don't apply is because there is no output VAT to account for on this. So again, on the assumption that you are standard rating, we move on to the next question. Are you VAT registered? Again, seems a sensible question. If you're not charging VAT, therefore the rules cannot apply to you. If you are, then you've got to, sorry, if your customer is not VAT registered. And the reason for that is because if the customer isn't VAT registered, then the customer cannot report the VAT on the sale because they have no mechanism to report it to HMRC. So again, if the customer is VAT registered, we move on to the next question. Is the customer CIS registered? So again, usually this is nice and straightforward in the fact that if you are making a supply and CIS tax has been deducted, you know full well that your customer is CIS registered. There are scenarios where you may have a gross certificate, which means that the customer hasn't deducted CIS tax from you, so you might have to ask the question. There is a useful, I say useful, there is on the government website, there is a list of sectors and trades that are affected by the CIS. You can look at that. The easiest one to do is ask your customer. If he doesn't know, then obviously on that assumption, if he doesn't know, the likelihood is he is not CIS registered. But on the assumption he is, then you'd move on. If he's not, then the normal rules apply. Question 5. This is the only one where a yes answer reverts you to normal VAT rules. So, has your customer confirmed he is an end user? I think this is going to be the question that causes most concern for people. What does end user mean? I think in simple terms, if you are doing work for your customer on a product that will be sold on to somebody else, then they are not the end user. I think the easiest way for me to explain it would be to say, if I am an electrician, I am called by a builder to go to their head office and repair a light fitting, then I'm doing work for an end user because he's not going to sell on my service to somebody else. If, as an electrician, I come in and perform some work for a modular building, and that modular building is then sold on to the end user, then as you can clearly see, my customer is not the end user, therefore the VAT reverse charge will apply. Now, there are some complications around those simple 5 questions. Today, I don't think it is the time to discuss them. Obviously, we'll have questions and answers at the end. If there are any specific questions on that, then we can answer them. Alternatively, as I said earlier, you can speak to your own professional advisor or pick up the phone to us or check our website. Okay, moving on. Sorry, Billy, what's...
So I mean, the end user thing can be a little bit muddied water. So how would a customer confirm that they are an end user of ours?
Okay. You must ask your customer if they are the end user. They must reply in writing. That can either be as a letter, either as an email, or where you have larger companies, it could well be in the contract. You must keep that written notification for your records, because if they come back and say we are the end user, then if you have a VAT visit, then it will be part and parcel of the process of reviewing whether everything is correct. Any next question, Billy?
Okay, no problem. So will this cause any problems?
There are many, but I think the 2 main issues that we foresee are 1, the administration, and 2, the cash flow.
Okay, and what are the administration problems?
So the obvious one is, how will I raise or create a sales invoice under the new rules if I am affected? So under the old rules, you raised an invoice that showed the net amount, the amount of VAT, the gross amount, and your customer paid you. Under the new rules, if you raise or create an invoice under the VAT reverse charge, then the invoice created is for the net amount, because that is what you are paid. You must then notify your customer on the invoice, thanks Billy, by including one of these 3 wordings. This is the wording that the revenue have approved. So you must indicate on your invoice that under Act 1994, Section 55 applies. Therefore, the customer would then know that they have to account for the VAT. The second one, very similar. We recommend that you use the last one. We think it's the easiest one. It avoids all the sections, etc. It clearly states at that point the customer is responsible to pay the VAT to HMRC.
So other than the wording on the invoice, are there any other administration sort of issues that you see arising?
Yes, again, most, if not all, of businesses now, because of making tax digital, will be using some form of software. Now, there are lots of pieces of software out there, so I'm not going to go into detail today on how you do that, but it is making sure, contacting your software provider to ensure that the software correctly accounts for how the VAT is to be treated.
Okay, great. And you said about there could be some cash flow problems. Could you go into a little bit more detail into what those could be, please?
Okay, if I give you an example, I am a supplier, I raise an invoice for £1,000. £1,000 plus VAT is £1,200. I have a very good relationship with my customer. He pays me next week. I receive £1,200. My VAT return was due at the end of this week. Sorry, my return date was the end of this week. Therefore, when he pays me next week, I don't have to account for that VAT element, the £200 to HMRC for 3 to 4 months. So that sits in my account and I can use that within my cash flow. Under the reverse VAT charge, my customer's now only going to pay me £1,000. He's going to have to account for the other 200. So I'm losing some potential cash flow implications. So that could have serious implications for one or two suppliers out there.
So if this is compulsory, is there anything that can be done to try and improve the cash flow issues that are going to arise?
Okay, if as a supplier, all of my sales or the majority of my sales are going to fall under these new rules, I would recommend that people consider moving from a quarterly VAT return to a monthly VAT return. Now, whilst that will add administrative burden and possibly cost, what it will do is, for most people who are, where most of the sales are under the new rules, they will have very little, if no, output VAT or no sales VAT. Therefore, they will be reclaiming money from HMRC on a regular basis. Rather than wait 3 or 4 months, we wait 1 month and make the claim.
So with there being so much to consider, what happens if somebody makes a mistake when it comes to implementing the new rules?
Okay, HMRC have said that they will administer this on a soft touch. I always find that interesting. They've said for the first 6 months, they accept that people are going to make mistakes and they will not issue penalties. On the basis that we are under COVID, most of the inspectors at the moment are dealing with other issues. I'm not sure that anyone will have an inspection in the first 6 months. I think providing you have some documentation, providing you clearly demonstrate that you have considered the rules, then you will be okay. If your first question, when you are first questioned by HMRC to say, and what have you done about reverse VAT charge, your answer is, what's that? Then if 12, 18 months down the line, I think you may well get short shrift. If you've said, yes, we've considered it, we've looked at the 5 questions, we consider that we are not affected, then you should be dealt with rather leniently.
So I think you've just covered this, but can I just confirm, if I was gross CIS status, would this still affect me?
Yes, it does. The fact that you are registered for CIS is the important thing. The other item that I think, sorry, I didn't make clear, those 5 questions that we were talking about earlier, I looked at it from a supplier-customer point of view, but you need to look at it as a customer-supplier point of view as well. I suppose the classic example, I'm an electrical contractor, I'm supplying goods to a customer. I may well have some subcontractors because I'm very busy at the moment, therefore I've got a friend who's an electrician and he comes to work for me. If he's VAT registered, then I become the customer and I will have to account for that VAT on his sale. So it isn't just looking one way, we have to look both ways. Don't, however, fall into, I know 1 or 2 of my clients have been contacted to say, reverse VAT charge. I've had a haulier contacted about this. I think it was a blanket email by a customer to all its suppliers. He's not within CIS, therefore he's not affected by this charge. Therefore, he, as a supplier to me, I do not need to consider him because he's not within CIS.
Okay, and there's a lot of businesses with a lot of different VAT schemes that they have in place. So how will this work with the other VAT schemes that are available? Okay,
as I've said earlier, I think the most important thing is to consider whether you move from quarterly to monthly VAT reporting if you are affected by this significantly. We don't see a lot of building contractors, stroke CIS contractors using the flat rate scheme. But if you are using the flat rate scheme, again, I'm not going to go into detail on what that entails, but if you are using the VAT, the flat rate scheme, it will not work for you. You need to seriously consider to come out of that and go back into normal VAT. Similarly, if as a customer, you are using the flat rate scheme, then again, you need to consider whether to continue, because the rules don't conflict between each other, and how as a customer you must report this conflicts with the flat rate scheme. The other one is cash accounting. Again, a lot of people, especially at the smaller end, use cash accounting, i.e. I do not pay over VAT on my sale until I have been paid, nor do I claim back any VAT until such time as I've paid my supplier. You can clearly see, if I'm significantly affected under these rules, my sales VAT will be negligible. So it doesn't matter when I get paid. Whereas claiming my input or VAT on my purchases at the date I pay my suppliers, well, I'm deferring when I can claim them back. So you might want to go on to what we call an invoice claiming system. So when the invoice is raised, I receive the invoice, I can claim the VAT. So again, it just improves that cash flow.
Okay, so my final question is, how will this actually benefit me as a CIS registered business, and how can I avoid it?
There are no benefits, are the simple answer. And it is not something you can avoid. You answer the 5 questions. If you answer them in such a way that the VAT reverse charge applies, there is no way around it. It is important, therefore, that it is answering those questions correctly. Again, I think as Teresa and Tom said in their webinar talk, it's about answering them fairly and giving due consideration to them. If you get it wrong, like anything, the revenue accept that we all make mistakes. If you've asked your customer, is he an end user, and they've not understood the question and come back to you and said, yes, he is, and he's not, that's not your fault. And therefore you will not be penalised.
That's brilliant, thank you. Yeah, I was just going to say, if you want, I can just show everybody the website that you mentioned earlier to ensure that people know where to go for any further information. So we have put this on our website. It's just got a little bit more, goes into a little bit more detail in case anybody has any other further questions. So we just have it here under the sectors, construction and the VAT reverse charge. So there's a page dedicated there. It's got a lot of frequently asked questions, a few of the oddities that might occur if you are in the construction industry.
Right, and I think at that point we will hand back to Teresa, as I think she will field the questions.
Indeed, thank you. And sorry if I put anybody off by having to move rooms, because my laptop was running out of juice and the plug sockets didn't seem to be working in where I was sat. So sorry about that. Hopefully I didn't distract you. In terms of questions, everyone, you can either type them in the Q&A tab, which you can get onto from either the bottom or the top of your screen, depending on whether you're on an iPad or a laptop. So you can type your questions in there. You can raise your hand. So there's another icon a few across from that where you raise your hand and we will come to you and you'll be able to then ask your question. Or you can go in the chat. I prefer it if you don't go in the chat. It's easier for me to keep a handle on those in the Q&A, but I'll go first to a question that's been put in the Q&A, and then I think I have got somebody with their hand raised as well, so we will then go to that. So a question I think for you, Tom: what, if any, are the key differences with the public sector rules? is there any IR35 specific public related case law, as many public sector organisations seem to be applying blanket rules? And if you're happy to take that, Tom.
Yeah, so I think there's not a huge deal of difference really between how it's applied in the private and public sector. I think the UK connection really is one of the only new things that's been introduced into the rules for the private sector that's not within the public sector rules. In terms of public sector bodies applying blanket determinations, well, I think what that really relies on is the individuals or people within that supply chain raising this as an issue. So they may be getting away with it purely based on the fact that no one's actually raised it as an issue. No one's brought a claim in relation to it. And so without those types of claims being brought, we don't see those rules getting tested within courts or tribunals. And actually, in terms of case law, there is very limited case law available on these rules. There's only been a number of cases really brought in relation to it. A lot of them really focus on TV presenters, as far as I can tell, who present for a lot of different channels and various different things, and are bringing claims to say that they are outside the scope of the rules. So the case law is limited. I suspect once these new rules come in to the private sector, we will see more case law develop over it. And actually a lot of the case law that's been relied on is more to do with employment status cases than anything else, I think, because of the significant overlap. So there's not much about in terms of case law, and I could be here for hours talking about the various cases that have gone before the court. So perhaps a question for us afterwards, you know, if they want to investigate that in any more depth.
Yeah, I agree. I get your point, Andy, who's asked a question about public sector organisations applying the rules in a blanket way, which of course Tom told you as an end user client not to do. But yes, many public sector organisations said, we're not taking the risk here, you're all deemed employment. Lots of contractors stopped working in the public sector, went over to the private sector, and of course now the private sector are going to be caught by the rules. So yes, case law has been minimal. Another one on IR35, then I'll turn to one on the VAT. What if my clients haven't asked a question of us? I believe we are a PSC. Are we liable by default? No, you're not. As we discussed and as I went through, the responsibility for doing the status determination is with the end user client. That is always the responsibility. So, you know, they might be a bit slow on the uptake, Melanie, and they haven't got round to actually, you know, speaking with you about it at the moment, but the responsibility is theirs unless they are, as Tom went through, a small business that's going to get into the small business exemption, because if they are in that category, then ultimately you as the PSC, it's your responsibility to do that. Donna has asked, what do I need to do if I receive an invoice from a supplier where the reverse charge applies because we are both CIS and VAT registered? Or will my account software deal, e.g. Sage, with the issue through the VAT return? So one for you there, Richard.
Yes, Sage, I know, should deal with it. It all relates to using the correct VAT code when you enter your invoice. Now, I can't remember what the code is.
T21.
Thank you, Billy. So when you enter the invoice onto Sage, you will click on and notify it as T21. Your software will then correctly account for that. What it will do is it shows the VAT within outputs and the VAT within inputs. So the net effect is nil because you haven't paid the VAT over to your supplier.
Okay, and Lisa has asked, we are a CIS registered company, but not all works we carry out fall within the scheme. Is it the work we should be considering, or is it the fact that we are CIS registered that makes the reverse VAT rules apply?
So the fact that you are CIS registered does not mean that all of your sales will fall under the reverse charge. You have to answer all of those 5 questions. So if some of your work, if for example, you did some work for a domestic customer, that falls outside the scope. So you would account for that VAT in the normal way. Work that you're doing for someone else that the reverse VAT applies, you will have a mixed bag. So again, it's accounting for each sale in the correct way. So you may have a mix of both of those sales on your returns. What you need to do then, in that case, when we talked about cash flow issues and administration, you would need to consider, where is my biggest impact? Do I need to change from quarterly to monthly VAT reporting, etc., if it is going to impact significantly on cash flows?
Thanks, Richard. That's great. Tom, a question for you. And it's a distinction here that Melanie has drawn, which is a good one. Is there a difference between entertaining our subcontractors at an annual Christmas lunch to them being part of our Christmas lunch?
Yes, I think there probably is. I think it's a subtle one, and you would have to be able to articulate the difference between those 2 things. And I'm not saying that you can't have them in the Christmas party, otherwise you're going to be landed with a whole load of tax and national insurance liability. It's one of a number of factors outside the 3 main pillars that we spoke about that just might give an extra edge one way or the other when you're looking at a status determination. So it's not that you shouldn't integrate them into your business necessarily in order to avoid liability. It's, I think, doing it in a way where they do still stand out to a degree, I think, is right. So maybe giving them a temporary badge rather than a permanent member of staff badge, subtle differences like that. And, you know, in distinguishing whether they are coming to the Christmas party as a guest or whether they are on the main list, you know, they're going to sort of be little distinctions that might swing your decision towards one side or the other. They're certainly not going to be determinative, but I think they are things to look out for with these types of individuals in these types of arrangements.
Yeah, totally agree. Another one for you, Richard or Billy. Do we charge VAT to clients such as letting agents or property developers? Does our client have to be CIS registered too in order for the rules to apply?
The second part of that is nice and straightforward. Yes, your client has to be CIS registered in order for this to apply. The first part is most letting agents, I don't think, will be CIS registered. Even if they are, there is, and this is one of the complicated or complexities of the rules, a letting agent is deemed to be an intermediary. So effectively, the letting agent is the end user. So it should not, the reverse VAT should not apply. In terms of a property developer, you would need to speak to your property developer as to whether he is the end user or not, but hopefully yes.
Okay, that's great. Now we've got someone in chat. Helen has asked a question. Do you have any standard policy wording or flow chart for decision making? I'm assuming that's for us, Tom, in terms of sort of steps to be taken in relation to doing your status determination. And really, Helen, the starting point is using the CESS tool and going through those 3 pillars that Tom talked about when you're doing the status determination. So if you are not a small company, you've got a UK connection, then obviously then we need to be going through and doing the status determination. The CESTL really is the best starting point for that. Tom, I don't know whether you've seen any flow chart or could come up with one that would assist.
Sadly not, no. And I haven't seen much in the way of policy wording either. I think some clients I've spoken to have been wanting to develop a policy on this. I don't think there's actually much wording that you need other than we are going to do a status determination statement. You will be provided with it. You have the right to challenge it. And I think a good thing to do is to regularly review it. I don't think that's something we mentioned in the talk, but I think it is something worth noting, is that where you have a lengthy engagement, I think at periodic intervals, it is worth reviewing the status determination to make sure it is still accurate and up to date. But no, I think flowcharts might be a bit of a crude way of dealing with it. I don't think it's an exact science. And I think if you're applying the same standard flowchart, you're maybe not giving due consideration to the decision. And so I agree with what you said, Therese. I think the starting point is always CEST. The next stage is to look at any of the relevant considerations. And I think if you have a sort of standard template wording for your status determination statement, which I think is something that we could produce or put together if people wanted us to, then maybe that is something to have in there, and you would always append your CEST results to that. But I don't think there's anything as exact as a flowchart for dealing with it, really.
Yeah, I think I have got one client that we've done a policy for, but as you say, it's a page and a half that doesn't, it's not particularly helpful in some respects, just saying that we will comply with the off payroll working, and these are the things that we will consider. June has asked, Tom, can we remind her of the 3 pillars that demonstrate small company exemption? June, if you want to listen to the webinar again, you will get a link emailed to you, but they are quite quick. So Tom, if you could just go through those 3 questions for the small company exemption, please.
Yeah, of course. So you need 2 out of 3 of them. So you don't need all of them. You only need to tick 2 out of the 3 boxes. So it's less than 50 employees in the business, less than £10.2 million of turnover, and less than £5.1 million on the balance sheet.
And Sarah has asked a follow-on question to that, which I think you did cover, but just go over again. She says, we're a group company, each part a separate legal entity on Companies House. They're all going to be small company exemption. Does the small business exemption apply?
Yes, it will. So when there is a group, and obviously only one of those group companies will be the end user, what you look at is the parent company in the group, or the holding company. If that is small, which in your example it sounds like it will be, then the small company exemption will apply to you.
Now, I was convinced that somebody had raised their hand, but I can't seem to see anyone with their hand raised. Can any of the others of you on the panel see if someone's got their hand raised? We have got more questions in the question and answer box. Taryn, oh no, they put it down again. That's okay. I didn't want to have, oh, now Sarah Prothero has raised her hand. So we can get Sarah on live to ask her question. That would be great. Taryn, if you could organise that for me. There we go. Here comes Sarah. Sarah, if you can ask your question, that'd be great. Just need to unmute yourself, Sarah. Oh, she's still muted. Vagaries of modern technology and webinars. I'm asking you to unmute, Sarah, but it's not happening. Let's go to another question and answer whilst we try and deal with that. So Richard, are we able to apply to amend our VAT periods to monthly through the government gateway, or do we just start sending a return in each month?
No, you don't just start sending a return in. You have to apply to move from quarterly to monthly. I think you should be able to do it through the government gateway, but I will check. Unless, are you aware, Billy?
Yeah, so when you log into Government Gateway, there'll be an area which says that you can change your registration details. So within there, you can change it to monthly. Or if you can't find that, there is a form you can fill out. I think it's called a VAT 484 form, and you would send that in the post.
You cannot change. Once you've submitted the request, you have to wait for HMRC to notify you of when your next return is due.
So they keep on doing it normally until they've got that notification then, Richard.
Yes.
Lisa's asked, if we've commenced works in February and the works are not completed until after March, and the invoice is sent upon completion, so after March, would the reverse VAT rules apply to the whole invoice, or would you invoice works done prior to the 1st of March separately?
So there are some transitional rules, and I don't have them all to hand. What I will need to do, Lisa, is come back to you with the answer. Effectively, I think the easiest way for you to do it, off the top of my head, would be to invoice what has been done up to the end of February, and then separately invoice anything from March onward, because otherwise you will fall, if it falls into the reverse VAT. But I will come back to you if that's okay. I'll pass it via Teresa.
Okay, great. And Nick has asked, are there occasions where the VAT reverse charge rules apply to new build housing, where the house builder is selling the home onto the customer stroke end user?
If your invoice is raised to your customer as 0 rated, then the VAT reverse charge does not apply. If you are charging VAT at the normal rates, then I think I would just need to double check that there are no transitional rules or no exemptions, unless you're aware, are you, Billy?
No, I think it needs to kind of be looked at on a case by case basis.
Again, if you ping me through that question, Teresa, I'll just again just give it a little bit more thought, and then we can go back to them.
That'd be great. That'd be great. Now Sarah was trying to put her hand up, couldn't manage to unmute her. I don't know whether you want to type your question, Sarah, or anyone else. So we're out of questions at the moment in the question and answer block. As I've alluded to, following the webinar, it does take some time, but we will download a recording of it. So I will email that to all of you potentially tomorrow, more likely on Monday. I'll make sure I put all of our contact details on there, so Richard and Billy's contact details on as well. If you've got any question, further follow-up questions or queries, then by all means email us. We'll share the slides as well that we have both used. Thank you all for your time this afternoon, both panelists and those of you attending, and have a good rest of the day. Thank you.
Thank you, Teresa.
Thank you.